I'm going to tell you a little story from 2011. Here's Adam. He wanted to propose to his then girlfriend. He quit his job about 4 years earlier. He used to work at a hedge fund, made lots of money, and then he quit to go join Fitbit as one of the earliest engineers there. So he wanted to propose, but he had a lot of grad school debt. So forget about the engagement ring or the wedding. He couldn't even get out of debt because he used to make a fraction of the salary at Fitbit that he used to make at the hedge fund. So fast forward a little bit, his equity stake at Fitbit is worth well over $1 million, but it's completely illiquid. It's just monopoly money. Couldn't sell a single share. And I can relate to this story personally because even though I've never worked at Fitbit and I've never had my equity stake in Fitbit where I never worked to be $1 million, I found myself in a very similar situation. I had a tough time selling my private company shares in order to get cash when I needed it the most for an important life event. And a lot of this, frankly, is because typically private company shares are just completely illiquid. So my name is Atish Davda. I'm the founder of EquityZen. I'm going to talk a little bit about the numbers you see up here today and the shift from public markets to private markets. What these numbers tell us is that venture capital-backed firms that remain private offer an enormous market. With companies staying private longer, the amount of returns that are being generated in the private market and therefore out of reach for most of the investor community is incredibly high. And this is because historically, investments in mature private companies, we're talking about household name companies, are limited to a country club of large institutional investors. It's as if you don't have a $10 million check, you don't even get invited to the country club, let alone getting to play. Now this started changing a little bit around 2009 when accredited investors started buying and selling Facebook shares before the IPO. The folks that made it happen were private market brokers. And even though they had really good intentions, they focused on only two parties, the buyers and the sellers. And so what happened was the company got left with a headache. It was just total anarchy. They had lost control over who was able to buy and sell their shares. It was almost as if the parents left their teenage kids in charge for the weekend. They went away. They came back. The kids had thrown a party, trashed everything, and the company said, you know what? That's it. I'm never taking a vacation again. So that overreaction is what we call secondaries 1.0. And what we've learned from secondaries 1.0 is that there's actually three key stakeholders in this industry. The shareholders who need liquidity, the investors who need the access, and also the company who wants control, transparency, and compliance. Because let's not kid ourselves. These are secondary market transactions. These are securities transactions. So if you hear someone tell you that we don't need to include the company, we don't need their approval, I would revisit them, ask them a few more questions. So what would an ideal solution look like? And I posit to you that an ideal solution would be built on three core tenets: transparency, technology, and trust. And so it's going to be no surprise that I'm going to tell you that EquityZen is building what we believe is a perfect solution here. Not only do we care about the shareholders and the investors, but we also care about the companies. With this, we're able to deliver the transparency that all counterparties need in the ecosystem. They want to make sure they're getting a fair price and that it's legally safe. They get technology in order to make the transaction process secure, easy, and compliant. And they also get overall trust because every counterparty is considered. They all matter. So this is EquityZen, a company-approved platform for investing in private markets. We were founded in 2013, and since then we've helped over 5,000 shareholders with over $450 million in equity value. These investment opportunities have been made available to over 10,000 accredited investors from 15 countries. These are family offices, single and multi. These are high net worth individuals. These are financial advisors who invest on behalf of their clients. And these are also asset managers. And last but not least, we've helped over 40 of the largest private tech issuers in the US with their liquidity needs and their employees' liquidity needs. The founding team and most of EquityZen's team has extensive experience on Wall Street. So we know that you can't always move fast and break things like our counterparts in San Francisco. And here's one quote that I'll let you guys read pretty quickly because I have exactly 15 seconds to get off of here. But effectively, what I wanted to point out is this. EquityZen is trying to bring to you the ability to invest and rebalance your portfolios in private markets well before these companies actually go public. So if you work in a financial services organization and you'd like to help us achieve secondaries 2.0, we'd love to speak with you. You can also head over to that URL afterward. Thank you very much.